Friday, and this is getting soft in the morning. And all 5 people who watch my videos, welcome back. A lot of time off last week and this week, but should be in it for the duration, the rest of this week. Markets just have been crappy. Let's face it, they have not piqued my interest whatsoever. Have really forced me to just walk away. Outside of the normal hours that you trade, 9:30 to 10:30, 11 o'clock, and then possibly the close. Like even the closes have been pretty quiet. Did some trading last night, traded some gold. Didn't really make much, but, did a lot of trades to make a little bit of money. And that's kind of been the size of it. And then, I think this morning probably the big news flow is going to be NVIDIA earnings. I'm going to go over possibly a trade today, April. I'm in April. Woo! What's going on there? What is going on? So Wednesday the 20th. I know Paulson's been making some statements. I've seen some of his stuff on Twitter. We got those crude oil inventories, FOMC minutes, which I don't think are going to be, I think are going to be somewhat meaningless at this point. And then that is kind of the day. And then again, I think the big story today, and actually tonight, is going to be NVIDIA earnings. Now, I know there was a number of companies like Target, and I didn't look. I know they were coming out this morning. I didn't look at them. We'll take a look here. Lowe's, $23 billion, 10% net income. So Lowe's beating estimates, but it looks like it's down, so I don't know what the story is. I would assume it has something to do with guidance, because it looks like their earnings were okay. Doesn't look like they were gangbusters, but they look like they were okay. And it does look like they did come out. So, and then Target actually having a good day, up a couple of bucks pre-market. And so likely their earnings were good. And as I mentioned even a couple of days ago with trading those in Target has always been a pretty good one to stay in its expected range for earnings. And I did not put any positions on Target. I actually wanted to, but I was busy yesterday and away from the computer. I was actually on the road at 8:30 and pretty much didn't have access to anything. I mean, I could have if I really wanted to. I just decided not to. But anyway, Target having good earnings today and up a couple of bucks. And so that's likely helping the broader indexes. I did not. Target actually did, again, I went over this one before. Target looked like a good one for earnings because it had good IV rank. Options are generally, like if you're going to do, I probably would have done the Januaries. You can see options in general are generally liquid, right? I mean, all along the curve, you can see even out those 130s. So anybody who had those 130s are likely going to have a little bit of a nice payday today with this little bump. I don't think you're going to get paid entirely as much as you think, because what's going to happen is this volatility is going to collapse on you, and that's going to shrink some of the premium in your options. I don't know. Let's take a look at Target. There might be... I don't own any Target. And let's take a look. And there might be an after earnings trade in Target at 129, up $2. Let's take a look. I haven't. I think I have retail. Big tech. I refined a lot of my lists. I got rid of a lot. Retail. There's Target. Yeah, I mean, up a bit. I don't know. Maybe not. Maybe not so much an after earnings trade. This is the daily. I mean, there is a lot of room to the upside for Target. I mean, this thing was down. I would have liked to own it down when it was 80. It is a bit of a turnaround story overall, Target, because like all retail, other than Walmart, most of these retail chains have just gotten beat up. And it was the Amazon effect for a while, but now, and then it was just not, wasn't even the Amazon effect. It was just the overall, I would just say, fatigue of people just going to big retailers. But maybe not so much an after earnings trade. I don't know. I don't really know if I'd want to get long Target. I mean, I have to admit, if anything, I actually like it. I kind of like it short. I don't know. Yeah, I mean, kind of leaning. So, like, here's my thinking is that, like, leaning in a little bit short here on something like Target, with a bias being that, look, you got, high energy costs, high gas prices, no real, I don't know, there just doesn't really seem like there's pressure to the downside on a lot of these, and I think that's going to start eating away at some of these, like I would call mid-tier retail establishments, because as people begin to allocate their money towards necessities as opposed to being disposable income, I think these places like Target and Ross stores, some of these larger kind of niche retailers, because Target really is kind of a niche retailer, because it's above Walmart, but it's below like a Macy's or whatever. Macy's is already like in the shitter. Same thing with Kohl's. I don't know. I kind of like, even TJ Maxx. I kind of like these. Looking at these, I kind of like this whole group. Short. You have Costco just actually killing it yesterday. And they have earnings coming up as well. But Costco is kind of a different animal all in itself. It's not so much a I don't know. Target short looks very interesting here for me. And I can actually see, especially seeing that, like, look, this was actually, this topped out at about 133 here, and it couldn't get the, we just did have earnings. Do have a gap here. Does this thing get back up to 144 again in this economy? I'm not so sure. I think if I was going to do something, I would go out to next quarter, sometime in September. Right? June, July, August. I would go out to September. Little bit of elevated, little bit more, better, a little bit better implied volatility there. Expecting about a $20 move from here. These prices will change. I actually could see myself, I could actually see putting on a put spread here, like a 130, like in the money, maybe like a 135, 130. Well, better yet, I would do the calendar spread. I would do the 135 in September, and I would do the August, or maybe even the July. Let me do the July. Let's look at the July. 130. It's going to cost, it's going to be a little chunky. You're going to get yourself about 5 deltas negative, but the reason I like going with the calendar spread is I like having the capability to, if I'm not right and it doesn't kind of go down, or it takes a while for it to kind of churn down, I do have some flexibility on rolling this short option a couple of times, right? I could roll it into August, and then I could roll it into September if I want to. And so I kind of like that trade better. I kind of like that trade better. Now, these prices are going to change a little bit because we're up, but I kind of like that. I kind of like that calendar spread. So the target 135 September put, and then sell an July 130. I kind of like that. Little in the money, right? Not extraordinarily in the money, but a little in the money, so I'm getting a little bit of intrinsic. And a little bit after earnings trade, and actually like with a bias here, right? I mean, definitely a bias that, retail, and specifically these mid-tier retail, are not going to have the summer to remember. In fact, I think, a lot of these retailers may actually suck hind tit a bit going forward here. Just, again, my call, just looking at the summer months, higher energy costs, air conditioning's running, gas prices still high, and someplace like a Target is going to feel the effects of that. Yeah. I mean, so anyway, there's a little bit of an after earnings trade on Target. Now, as far as earnings, we have, and TJ Maxx, they came out as well, I think. And they're actually up about $5. They raised annual sales profit targets. I mean, again, here's another one that I actually looked at on the chart here too. TJ Maxx, where is it? And again, they both kind of had the same. But you can see this has been a revenue machine for earnings. about midway through. I mean, all-time highs here, 166. Trading at 156, $10 away from it. Again, I don't know. I kind of like that one, especially after this move. I kind of like this short too. Now, I haven't really, and I would go to September. And these are relatively liquid. I'm going to say they're totally, but they're relatively liquid. And I would do a similar thing. I kind of like the 160. The 160 strike. The 160, 155. This one's a little nicer, but again, these prices are going to change. This is up $5. But I kind of like the 160, 155 there on TJ Maxx. Again, two stories like, look, all right, and it's been a revenue machine, but again, at what point is these higher prices going to begin to eat into disposable income? I don't know. Anyway, just throwing that one out there as well. And so I kind of like going against being a little contrarian here, especially after earnings on both of those, on TJ Maxx and Target. The only retailer I am overall still bullish on is Walmart, and it's only because Walmart is a little bit more than just a retailer. They're kind of like, I kind of equate them to like a Costco. I don't trade Kroger or Kohl's. These are just kind of up. They're up there for the sake of being up there. And then there's the XRT, which this ETF has really gotten ruined, honestly, by having some real shitbags in its portfolio that's kind of made it a bad ETF that's not really indicative of the entire space. So I wouldn't even use that to like go short the whole space. So anyway, yeah, so TJ Maxx and Target, little counter trend. I mean, contrarian, kind of going against the grain a little bit. And getting short Target and TJ Maxx here. Kind of like that. All right, let's go back to NVIDIA. EVNDA. A huge amount of options in this. Likely gonna do June. The hardest thing with NVIDIA though here is, and as I mentioned, it's probably true with all of these tech stocks. It's look at the chart all you want. It's really irrelevant. It really has to do with volatility and expectations. And from what I see is I would be very apprehensive of shorting or being short calls, because your problem with this is not this getting hit. It's going to be this blowing out and being up like $25 or $30. We're expecting a $22 move here in June, and that's your risk. Your risk is absolutely to the upside. It isn't to the downside. It's not. I mean, because, I don't think anyone, like I honestly wouldn't have a problem being short like a 190, 180, and it's going to have to be $10 wide in order to get an iron condor in here is going to need to be $10 wide to really make to make it worth your while. Otherwise, it's not going to be even worth it. But I can honestly see myself being short puts and having no problem rolling them forward, being short calls, and then having to roll them forward. I think you just got to be willing to accept that if you are going to sell out here at like the 350 strike, that you just got to be willing to accept the fact that you might be wrong. And if you're wrong on those, you just need to get rid of it. And don't play this I'm going to roll them game, and because you'll be in a perpetual commission funk with Tasty Trade that you're not going to like. So with that being said, if you are going to do a trade like this, this is really the only thing that I see worth doing would be to go out and I would actually go as far as saying I would actually be willing to go up to the 195. I wouldn't go any higher than that. I would go up to the 195. Staying just below the round number, that 200, seeing that if it does get hit, it's likely that, they'll keep it around 200. Again, I'm just speculating. $22 move, you're still inside that on the downside. And depending on how it does today, right, it's up $3 today. So depending on how it does today, you might even be able to move that up to the 200 strike. But based on where it is now, that's kind of where you're going to want to land at the bottom, at the 195. And then up here on this side, I would go outside the 1 standard D. I would go up to the 255. I would definitely go up to the 255, 265. Definitely make it $10 wide, so I'm at least, all right, look, I might be risking a little more, but I am bringing in a little bit more. And I'll try and do that for 210. I kind of like this spot. And this is what this looks like. So it's the 195, 185, 255, 265. $10 wide iron condor. You could call it a poor man's strangle. You can call it whatever you want. It's kind of a poor man's strangle. You're as delta neutral as you possibly could be. You're getting a decent theta in here at 5, almost 6. And you're looking at something that has a 70% pop. Probability of profit. So to me, that's a pretty solid trade for NVIDIA earnings based on where the price is now. Obviously, if it goes up a little bit more this afternoon and where it closes, you're going to have to do this trade before the close today. So likely I would start putting it on around 3:45 or so Eastern time is what I usually do. Around 3:45, I start trying to put these on. And I say try because you're going to want to start it at a price that you want, and then you're going to have to work with it because there's obviously got to be somebody. If you're trying to sell it, there's obviously got to be somebody else on the other side trying to buy it. So, and you may not find a buyer for the price that you're being quoted even, right? So you're going to have to play with it a little bit. So I do like that trade. That to me is about the best spot to be in NVIDIA. And then, as I said, look, if you get blown out on your calls, I would just take it that, look, I'm going to come in Thursday morning, and as soon as the market opens, I'm going to give it that hour or so to see if maybe there's a sell-off and it pulls back. But if my calls get breached, I'm just going to take it as I lost. on that side of the trade, I am going to dump it and get rid of it. I am not playing this fucking game that's played with this. I mean, if I sound a little harsh about this, it's just I really wish this company would just come to the fruition and say, sometimes you just lose and just so accept it. And, that's my problem with these rolling trades, that it's not always good to roll. It's not. I mean, sometimes you just take the L. And in this case, I think it's one of those where you just take the L. Take the L and then roll the puts. And then maybe over time you make it up on that side. All right, and so that's it. And so that's how I would play it. And if your puts get taken out, I don't find that to be a big deal. You do have plenty of capability to roll these. And so that's the trade for NVIDIA, and that's really it as far as like what's on deck. And then I'm going to flip back into futures. And I don't think there's, outside of today, I don't think there's really anything else worth trading. Walmart. I don't know if I would trade. Let me see. Walmart is at a 70. Maybe there is Walmart. And Walmart is a morning releaser. Yes. It's a morning releaser, so they do release in the morning. There's just even though the volatility is up here in Walmart, there's nothing to be had here. Expecting a $10 move. Unless you go right at the $10 move, like maybe do a 125, unless you go right at the $10 move, you're not going to get any money. You're not going to get any money at all. Yeah, you're going to need to go right at the $10 move. You're going to go up to the 145, 150. That's about all you got in Walmart. If I was going to do anything, this is about where it would be. Yeah, that's about where you would be in Walmart. You really, in order for it to make it worth your while, you're going to need to be pretty much like, if you look at that, I am right at the one standard deviation on either side. Like, here's the one standard D. And I'm literally like right on the expected move to the downside. And then to the upside, I do have a little bit of cushion, but there's really no strikes in here. I don't like messing around with these $2.50 wides. They just never seem to have the liquidity as the traditional, like, full numbers, like the 50s and the 5s, like these 2.5 that they add. I don't know why they do that. They do it for money, obviously, but I just don't know why they do that. It just actually makes the existing options a little less liquid, but hey, that's what they do. But that's about where I would land. And I would try to do this for about $1.40. And this one you're going to need to do at the end of the day today too, because they are a Thursday morning releaser. Walmart usually releases in the mornings. All right, so there's Walmart, and not even looking at the charts because, like, again, I think the charts are kind of irrelevant at this point. For Walmart, it doesn't say here whether it's before or after the bell, but I'm pretty sure they go before the bell usually. And so anyway, that's earnings, and then next week we got a couple, which I'm not even going to look at those. And then as far as I was looking at the Russell, and there is a couple of spots that look interesting, but not overall exciting. I do kind of like, I don't even know if we get up there, but it is kind of a ways away. I do like this area up in here where yesterday's highs were. Yesterday's highs is 27.94. We have an R1 at 27.83, and then a swing here at about 27.90. So this general area is pretty interesting to me today for the Russell for a possible short. Nothing definitive. I have a couple of alerts set, but just kind of sharing that. And then as far as, I don't know if I'd be willing to get long if we sell off from here. And that goes true probably everywhere, not just in the Russell, but also in the NASDAQ. I'm really not interested in shorting against the box. So if we start to sell off, I'm not going to jump on it. And I don't know if I'd be willing to jump in a long at any of these spots down here if we do sell off. I would, however, be very interested in this area up here by R3, 29,450. I know it's kind of a ways away. We're like another 200 or 300 away, but this area up in here, you know, over 20, and I'll call it over 29,400. I like, there's a couple of spots here that I do think are pretty ripe to possibly take a short if we get up there today. Outside of that, I don't see much of anything. It just looks like a really boring ass market that I care not to wrap my mind around it. I always found that when the markets are boring, act boring. Don't try and manufacture trades just because the market's boring. Walk away, because you know what? It'll get better eventually. And it always does. It's just this time of year, from now till about July, beginning of August, it's going to suck. And it's just what it is. And so I'm just accepting it. Gold's been really, really weird. Short trades in gold have actually been a lot easier the last few weeks than the long trade. And I don't really see anything in here, though, that makes me want to trade this. Traded it last night reluctantly, and I just really didn't. And I have to say I made some money, but I kind of feel lucky that I made money because I just did not feel, trading it just did not feel comfortable. It was a very uncomfortable situation, and the price action it's just really, it's thin. It feels like the gold of old. If anybody can relate to that, it feels like the gold of old, where gold used to be this very, very thin traded asset, similar like natural gas, and then it would just pick up and move on some stupid, weird headline, and then it would go back and trade like shit again. And that's kind of how I feel gold is trading right now. It's kind of going back to its old ways, and so it's making me a little uncomfortable trading it. But, use your discretion. You do have a number of areas. You can see here I have tons of alerts set up here to the upside for possible shorts. Don't really have much down here for longs because, again, the long trades just haven't really felt a little more strenuous than the short trades, so I'm going to continue with that bias. And then last but not least, the crude oil is actually having a little bit of a sell-off today. Not entirely crazy, but a little bit. I mean, it is off its earlier highs, but still over $100. And in my opinion, for anything to really make any kind of move here, we got to get crude under $100. And more importantly, it's got to get back down to $90 and $80. Before everything else starts moving. And then, close out, bonds have been just an absolute disaster, especially for me. I actually put some long positions on bonds, and they have not been working out. at all. At all. And bonds have just been getting absolutely punished. Little bounce today. Nothing to shake a stick at. Got a long way to go back up to these 114s. But bonds, another trade that's been a tough trade. All across the curve, it doesn't matter whether it's the 30, the 10, and even the 2. I would say as far as where the action has been, most of the action has been on the long end of the curve. As far as the movement, you can see that's been a big move. The 10-year really has, again, it's still a pretty decent move, but it does seem like a majority of the action is sitting on the 30 right now. Because I think no one really knows what they're going to do with interest rates. There's so much speculation, and I just don't think anything's going to happen. I think if they keep talking about raising, and I think it's just going to be talk. I think they'll do nothing as opposed to raise. But anyway, who the hell knows? And so that's it. That's all I got. So we're waiting for the afternoon Fed minutes. We're going to kind of work through what few earnings we had, which all seemed to be okay this morning. So that's kind of why I think the market's up a bit this morning. It was actually under some pressure overnight. But I think some of these retailers having decent earnings actually are helping things. And that's it. That's all I got. So would we go 36 minutes? So pretty good. Number of trades to do. We got Target short, TJ Maxx short, Walmart Iron Condor, and Nvidia Iron Condor all on deck for today. And, a couple levels in the Russell, NASDAQ sort of thing. So that's it. Let's have a good one today, and I will be